Good afternoon, and welcome to Scotia iTRADE's webinar. Today's topic is on identifying investment risks and opportunities using sustainable investing scores. Our presenters today are Michael Jantzi, the CEO of Sustainalytics, and Margaret Child, Manager Advisory Services with Sustainalytics. Before we get started, let's take care of some quick housecleaning items. You should be able to hear me clearly. However, if you're experiencing any audio difficulties, please use the sound check link in the audio panel as shown on the screen. Now, this link may show up as a settings link, and the setup window may be on your secondary screen if you're using two monitors. As always, everyone is muted for sound quality purposes. If you've joined using your computer audio and you find that the sound quality is not great, you're always welcomed to join using your telephone. Just don't forget to enter the access code and the audio pin ID. We'll also be able to use the control panel toolbox. Just the arrow at the top can either minimize or maximize the screen. You can use that to toggle back and forth. Also, you can watch this in full screen mode. Now, if you have a question, just use the hand icon there, or if preferred, use the question box. Type in your questions into the question box, and our presenter will either address them immediately or at the end of the webinar during our Q&A session, which we will be holding at that time. Now, as a quick reminder, Scotia iTRADE does not provide investment or tax advice or recommendations. Nothing in this presentation is or should be construed as investment or tax advice or a recommendation to buy, sell, or hold any security or to follow any particular investment strategy. This presentation will only be for information purposes. Now, we will be making available to you a handout for download at the end of the presentation, as shown in the handout icon on your screen. You will not be there right now. I will make it available for you afterwards, after the presentation is completed. So just bear with us a few seconds once the presentation is completed. We're going to be recording today's session. So you are able to make notes, but we will be recording the session, and we will be emailing you the link within 1 business day. Alternatively, you can visit our YouTube channel, the Webinars on Demand playlist, to get an archived copy, or you can just email us at education@scotiaitrade.com for a copy of the recording. So today our presenters are Michael Jantzi and Margaret Child. Michael is the CEO of Sustainalytics. He was the founder of Jantzi Research and has been active in the responsible investment field since 1990. Michael is a thought leader on sustainability, investment, and corporate social responsibility issues, and regularly appears in the global media. He is the co-author of the 50 Best Ethical Stocks for Canadians, High Value Investing, which is published by Macmillan Canada. Margaret is the Manager of Advisory Services for Sustainalytics. She works with investors in implementing their sustainable investment strategies and in integrating Sustainalytics ESG research into their investment processes. Margaret has over a decade of experience in the financial services industry, including credit risk and front office roles, helping high net worth and institutional clients with customized investment solutions. She's also an advocate for sustainable investing and has been published several times on the topic of sustainable investing over the years. Michael will be facilitating the presentation for the next 30 to 40 minutes, after which Margaret will assist during the Q&A sessions which will follow. So at this time, I'm going to hand over the presentation to Michael to complete. Thank you.
Well, thank you. I have to say that Margaret and myself are delighted to be here alongside Scotia iTRADE and talking with all of you today about this thing we call sustainable investing. And we're going to spend the next 30 to 40 minutes together, and hopefully by the end of the time we'll have a better idea of what sustainable investing is all about It may be something that you've known about and heard about for a longer period of time. It may be something that's just more recently landed on your radar screen. But we're going to talk a little bit about what this is all about and why we're so excited to be working alongside iTRADE to get environmental, social, and governance information into your hands so you have an additional lens of research and analysis as you look at your own investment portfolio. One of the interesting things, one of the things I really like about iTRADE, I know as you're looking at your own investment portfolios, it gives you a way to connect into a much broader community. And when you start thinking about sustainable investing, you'll soon find that you're also tapping into a much broader worldwide community. And so we want to give you a sense of the size of sustainable investing, what's driving the growth, not just in Canada and the United States, but a little bit globally, because I think it's useful and may help inform exactly how you might wish to use the information that's on the iTRADE platform moving forward. And of course, we'll start off a little bit talking about Sustainalytics so you can put our comments into context. But at the end of the day, really, we want to make sure that we're focusing on the issues that you want to know more about. So feel free to ask questions. If they fit in, I may take some time out throughout the presentation to address them. If not, I'll make sure that we've got time at the end to address any of the issues, comments, questions that you have. So I guess a little bit to start about Sustainalytics. I don't want to spend a lot of time on this because I really want to give you a sense of how we're working with iTRADE to provide, you know, that additional research to help you out in your investment. But the easiest way to think about us at Sustainalytics is as an investment research firm. We'd be like any research firm that you'd find on Bay Street or Wall Street with one exception, and that is we focus exclusively on providing the research, analysis, insights on environmental, social, and governance issues. And we provide that research to investors around the world, including here in Canada and the United States. Now, sustainable investing, I mentioned earlier, might be something that's just landed on your radar screen. Believe it or not, we founded this company in Toronto, proudly Canadian, founded 25 years ago, and we've now grown into what we affectionately refer to ourselves as a micro multinational. We're the largest pure play environmental research firm in the world. We've got more than 300 people, which I guess is the multinational part. The micro part is that we're spread across 13 offices globally that you can see on the map there. As I said, we focus exclusively on providing, you know, ESG and corporate governance ratings and research. We cover the globe, but we like to say that our research is underpinned by local expertise. And then, as was mentioned earlier, and this is a lot of the work that Margaret does, in fact, she works with our clients to help integrate the ESG research and analysis into their investment processes, and works a lot on the tools that you see on the iTRADE platform that we're excited about because you'll have the opportunity to access the analysis to help you make decisions in regards to your own portfolio. So you'll notice, I mean, obviously the title of the webinar today and the term we use is sustainable investing. And so you may be going, well, what is sustainable investing? And my goodness, I've heard all sorts of other terms like ethical investing and socially responsible investing. I've already used the term environmental social governance, or the acronym ESG, and many others. And I expect that in some ways it can become confusing. The reality is, to be quite honest, from my perspective, it doesn't really matter what we call this. I really like the term sustainable investing, but whatever we choose to call it, the reality is what we're talking about and the relationship we have with iTRADE and the tools that we're providing, the information we're providing to you, is just allowing for an approach whereby you can consider and integrate environmental, social, and governance factors into your financial and investment decision making. That's what it's all about, and we'll talk a little bit about why people are doing that, why you might be interested, whether it is to get more information on the risks or opportunities that are associated with a particular security, You may also be interested in aligning your investment portfolio with your own personal values to achieve broader societal outcomes. But whatever it is, we're talking about integrating ESG factors into the process. That's what it's all about. There has been a myth out there with sustainable investing that somehow we're preaching that you only need to look at environmental, social, governance factors. You can ignore the traditional financial parameters that you look at. That's not what this is all about. What we're doing here is providing an additional lens. I mean, iTRADE provides a variety of amazing tools to allow you to look at a company, and we're just adding one more to that process. So whatever you want to call it, it doesn't matter to me as much as the fact that you understand that we're adding ESG as an additional filter because, quite frankly, as you'll hear me say probably repeatedly through the presentation this afternoon, that we think it can help you make a more informed decision. So what does it mean when we're talking about ES&G? Again, on the environmental side of things, it can mean a variety of different indicators and issues and themes that we're looking at. So we'll look at, we can look at climate change as a part of that and look to see how companies are addressing climate change risk. We look at water issues. We look at energy issues. There's a wide variety of things we look at in the environmental side. On the social side, one of the things that is really key to a lot of companies' long-term success is human capital. Do they have the ability to attract and retain the best and the brightest, which can give them a competitive differentiation in the market? It can help reduce absenteeism. It can help reduce turnover, which of course are key competitive differentiators in a labor market that is becoming increasingly tight and competitive. On the governance side, we're looking at whether or not the board of directors is appropriately structured to provide you as investors with the oversight that you would expect and that you need to drive positive shareholder value over the long term. And so we're looking there at board independence and separation of CEO and chair positions and executive comp and all of those good things in the governance side. But the fact is we're looking at these issues from both a risk and opportunity standpoint. And I'll give you some examples a little bit later on why we believe that ESG may help you highlight risks that otherwise might be missed, and those risks might be something you care about, whether it's from a values-based perspective or whether you simply want to know that the company you're investing in is going to be a good long-term investment from a financial perspective. But we're also providing a lens on maybe things that differentiate companies from their industry counterparts and provide them with an opportunity in product innovation, product differentiation, and the like. So we're going to touch on all of those things over the next now 20-25 minutes or so. So the reality is, I said earlier that one of the things that I think is really nice, with you being able to access sustainable investing research and analysis is that through that, you're tapping into not just information on a particular security or industry sector or theme. I actually view it as you're able to plug into a much broader community of sustainable investors around the world. And the fact is that sustainable investing is one of the fastest growing trends in the global capital markets today. And we could look at a lot of facts and figures, and I certainly don't want to bore you with that by any stretch of the imagination, but I do want to give you a sense of how sustainable investing has grown and it's the heft that it has in global capital markets today. And maybe the easiest way I can do that is simply point to an organization called PRI, Principles for Responsible Investment. And this is an organization of investors, institutional investors like sovereign wealth funds and pension funds, but also investment managers from the largest in the world like State Street Global Advisors through to very small boutique managers that have signed on to the PRI as a commitment to integrating environmental, social, governance factors into their investment process. It's not prescriptive. The PRI doesn't tell investors how to look at ESG information. It's simply saying the investors that sign on as signatories are simply saying these types of issues are important to us. We will look at integrating them into our decision in a way that fits our own processes. And we believe that that's important to do because it's aligned with our fiduciary duty as institutional investors, and we believe ultimately at the end of the day it's going to help us make smarter, more informed decisions, which should lead to competitive shareholder returns and value over time. And if you look at the growth of the PRI, in just about 10 years it's been quite phenomenal. And so today there's about 1,400 signatories to the PRI, and collectively, as you can see there quite easily, they're managing in aggregate about $60 trillion worth of assets. So this is, this thing we call sustainable investing is no longer a fringe concept. This is solidly part of the mainstream capital markets and investment community, which is, of course, one of the reasons that we're excited. For the first time in Canada, we're able to provide you the same type of research and analysis and insights that the largest, most sophisticated institutional investors in the world have had access to. We're now giving you the opportunity to put those into your hands. So another reason why Sustainalytics is just so pleased to be working alongside Scotia iTRADE. Again, I don't want to talk too much about the statistics, but we're focused here in Canada and the United States, and there's just a couple of graphs here again that in our own backyard we're seeing a tremendous growth in the sustainable investing side of things there. We're really starting to see a pickup in the investment side. You see growth up over the 90% in the last 2 years that we've seen studies, similar trends in the United States. So it is happening globally, but including here in our own backyard, and that's quite a comfort to me and quite exciting that you're a part of it. I think the other thing is that is notable is that I think historically, when people have thought about sustainable investing and looking at investing, they've really only focused on the equity side. And of course, that's where a lot of us as individual investors have our portfolios focused. But the value of ESG or sustainable investing is starting to show itself across a broad range of asset classes. And that's one of the trends that we're seeing, is that it's gaining traction, as we've seen in different places around the world, and across asset classes. So it may not seem intuitive up front. It's not just about equities and fixed income. It's about asset classes like infrastructure, for example. And once we think about it, I think it makes some sense. I mean, if we're looking at an infrastructure investment, for example, you're talking about large projects. There's significant capital outlay required. And at the same time, the payback for that capital is over a long period of time. And you need to have long stretches of uninterrupted cash flow to make that payback worthwhile. And the fact is that the longer our time horizon as an investor, the greater risk that we have that we're going to be exposed to E, S, and G issues. And therefore, we want to make sure that we understand the exposure we have to those issues so that we can work that into the risk-return equation. So another trend we're seeing again is diversification across asset classes. I think the other interesting thing, and I've already noted this, is that largely speaking, the growth in responsible investment or sustainable investing has been in the mainstream side of things. That may surprise people because we sometimes don't think of sovereign wealth funds or pension funds as maybe being the most, quote, progressive institutions. But the reality is that they are charged with meeting the pension promise. They know that they need to provide pension retirement benefits for people over a long period of time, and that they also are beginning to understand, as you can see by the stats, that looking at environmental social governance factors as part of that decision is not just becoming a nice to have, it's becoming a need to have. So we've seen just tremendous growth in the institutional side of the market in accessing this type of research and analysis. And of course, it's not just about the investors. As individual investors, obviously, as an example, tapping into iTRADE, you need an infrastructure. We need tools around us to help us facilitate the decisions that we want to make. And the infrastructure of investing is paying a lot more attention to responsible and sustainable investing as well. Just one example of that is the CFA Institute, and a lot of the research that you're getting access to is produced by analysts, including an increasing number here at Sustainalytics that have their CFA designation or in that program. But the CFA Institute is absolutely seeing in their members and prospective members a much more dedicated interest in knowing and learning more about ESG. You're seeing that almost 3/4 of the respondents to a recent survey that they did are looking much more seriously at ESG as part of their investment analysis and decision making, because again, over the long term, they believe it's going to help them get a better sense of the securities that they're investing in the portfolios that they're putting together. But I would be remiss if I only focused on the institutional side of the market. I mean, the fact is that you're here, you're with iTRADE, you're individuals that are looking at securities, looking at your own portfolios. And the reality is that a more recent trend in this space, and it's coming with a real vengeance now. This is not just about Bay Street. This is not just about pension funds. This is not just about large asset managers. Sustainable investing is now connecting to people like you and me. It's connecting to individuals. So as I say, it's connecting to Main Street now, not just Bay Street. And that is one of the most powerful trends and more recent trends that we're seeing in the sustainable investment side of things. And there are a lot of reasons that I could point to why I think that's happening. But the reality is that study after study after study are showing that as we're going through sort of this intergenerational transfer of wealth, as we have younger investors coming in and gaining access to money and capital, they just happen to be more concerned about environmental, social issues, whether that's because they believe that it gives them a better insight into the long-term performance potential of a company, or whether they want to make sure that their decisions have, broadly speaking, positive impact on societal outcomes and so on. Whatever the reasons, they're more interested, and that's driving folks that serve the market like iTRADE to look more closely at the tools here. And the reality is, again, an indication that something is absolutely happening here is, well, the fact that we're speaking to you today. We're working alongside iTRADE. We're having this webinar. The fact that Morningstar, for example, is now working with Sustainalytics to provide sustainability fund ratings because they're seeing the demand not just in Canada and the United States, but around the world for this type of information. So the trends are clear, and through iTRADE, you're plugging into a much broader global community. So I've touched on some of the drivers, like what's driving the growth in this area. I do want to spend a few more minutes talking a little bit about that more specifically. And the reality is that there is no one driver. I can't point to one thing in particular that I believe is driving the growth and interest in sustainable investing in Canada or elsewhere. As I said, part of the driver is that people want to increasingly align their investments with their values. That's becoming more important to them. That is moved from, well, I just want to avoid companies that may do things that I disagree with or have more of a negative impact. We're starting to move into a realm now where people are actually seeking out positive impact environment or investments. So they're actually seeking out high impact investments, whether they're focused on transition to low carbon economy, renewables, and those types of things. And of course, as we talked about, especially with the institutional side of things and increasingly in the individual retail space, people just are beginning to understand that we're living in a very different world. And whether or not we believe in climate change, whether we're looking at human rights issues and whatever we might think about them, the fact of the matter is that increasingly companies understand these to be business issues, either risks or opportunities that they have to manage effectively. And in turn, investors are beginning to understand that they need to factor them in. And it's not about right or wrong or values necessarily. It's simply about helping them get a better sense of what that company is going to do over the long term. And this has been a real significant change that we've seen. I mentioned earlier that, and I think in my intro it says I've been doing this a long time, longer than I can remember actually. But when I started in this business in 1990, the fact was that investors would often say to me, I do want to look at environmental, social issues, but I can't. And I can't because the law tells me I have to focus on the bottom line. And if I'm distracted from that, I'm actually working against the duties that I have as a fiduciary. This isn't as big a deal for individuals. We all have control and decisions over our own portfolios and our own investment decisions, but it certainly is a big deal for pension plans and so on. But boy, that has really flipped on its head, and it's 180 degrees today. And the reality is that now you have large investors saying, if I ignore environmental and social issues, I may be missing real risks that I need to know about, or opportunities on the flip side of the coin. And now it's largely understood, including in Canada, the United States, and jurisdictions around the world, that if I'm ignoring those things, I actually, in fact, may be transgressing my fiduciary duty. And the reality is, though, all of this is based on the question of materiality. And one of the ways that I like to explain the value of sustainable investing is through the analogy of an iceberg. I sort of think of companies as an iceberg, and because I'm an investor as well, when I look at a company and I'm trying to evaluate what it's all about, is I'm not trying to dial my risk down to zero. That's not what investment's necessarily about, but I'm certain that you want to be compensated for that risk appropriately if you're going to be taking it on. And my contention, I guess, going back more than 2.5 decades has always been that I think the tools that we have, or traditionally have had on the financial side, have really given us a wonderful understanding of what that company or the iceberg looks like, well, at least above the surface. But I've always believed, and I think it's become increasingly true, that a lot of the risks that we have to deal with as investors sort of sit below water level. They're environmental, social, governance risks that we may not otherwise think a lot about. And I really do believe that ESG gives us a better equipped sonar. It allows us to get a sense of that company or the iceberg, if you will, top and bottom. And to me, that's really what giving you access to sustainable investing research and analysis is all about. And you will never hear me say or promise you that if you look at ESG, you're going to drive superior investment returns. I would never tell you that. But what I will say is I believe fervently that it helps you get a better understanding of the company or the portfolios that you're looking at. And you don't have to take my word for it. We could fill the office towers in downtown Toronto with studies that have looked at ESG, sustainable investing, and shareholder value from every which way you can possibly imagine. And the reality is that what I am comfortable in saying is that myth that sustainable investing equals underperformance, if it isn't dead, it's well on its way. So that's what I'll say in regards to the return, risk return thing. There are other drivers out there. Obviously, the regulatory framework and the changes we've seen on a global scale and regionally drives an interest in the risk and opportunity side of it. I wanted to put this in because I'll tell you one of the questions I'm often asked today is whether or not I believe that the Trump administration in the U.S. and the direction that administration seems to be going in regards to environmental regulation, for example, is going to stall or slow the growth in sustainable investing in the United States. And I mean, the reality is, to be honest, obviously I don't have a crystal ball, and it may slow it to a certain extent, but I argue that the momentum we're seeing in sustainable investing, from the largest pension funds in the United States to the largest asset owners, right down through individual investors and the tools that are being put in place for them, including the iTRADE, the momentum may be slowed, but it's going to keep pushing forward. And the reality is, just as an example on the regulatory side, federal governments obviously have a role to play, but in the United States, a lot of the environmental and social regulation is actually state-led and increasingly municipally led. And so the regulatory drivers in the United States are not going to disappear over the next 4 years of the administration. And so I don't think that we're going to see a demonstrable slowdown or interest in sustainable investing in the United States or in Canada for that matter because of the recent administration. So I want to spend a little bit of time here and then ensure that we've got some time for questions. How can you use Sustainalytics research and analysis and insights on the iTRADE platform? How is it that you can leverage it on its own? How can you use it side by side with the other wonderful tools that Scotia provides? Well, again, there's just a myriad of different ways, and we don't have time to go through all of those today. But again, if you're an investor that wants to look at this information as just another set of data aside the financial information, it gives you another lens into the company. That sort of fits into what we would call the ESG integration box. So you could get an identification of signals, I guess good or bad for that matter, that may give you pause. You may want to dig into a little bit more deeply. There may be issues as an investor that you just don't want to be involved in. So for example, you may say, well, listen, I do simply, no matter what else is happening at the company, I do not want to invest in a company that is manufacturing cluster munitions or chemical weapons or those types of things. And so the information that you've got in your hands here on Canadian US companies will give you access to that type of information. You may say, I want diversified portfolio, and you're looking at oil and gas companies, but you want to make sure that you're investing in those best-of-class companies that understand the risks they have to climate change exposure or water risk. You want to invest in those companies that are positioned to attract the best and the brightest in an industry that is increasingly challenged from a shrinking labor pool. And so you can use the research that iTRADE provides through Sustainalytics or with Sustainalytics to highlight, the best in class or best of sector oil and gas companies, comparing their ESG performance record against those of their industry counterparts. So there's just a variety of approaches that we can use, with the Sustainalytics data through the iTRADE platform. And so I'll give you a few examples of things that you can take a look at. But again, one of the questions we're often asked, and I know in Margaret and her work, it's asked a lot, especially if sustainable investing is newer to you. Well, how can ESG help me understand the long-term shareholder value perspective of a company? That doesn't make a lot of intuitive sense to me. And the reality is that, I've touched on some of these things, but when you look at ESG issues, the reality is an environmental issue isn't just an environmental issue anymore. As I said earlier, these are becoming real business issues. And so on the one hand, companies that pay attention to environmental risk and manage those things appropriately can save costs. That can really positively impact the income statement, energy efficiency, turning waste into a revenue through a closed loop system. These are all things that can positively impact the expense side of the income statement. On the other side, companies that integrate ESG into innovation, product development strategies can soon find themselves developing new product lines, can provide competitive differentiation in the market, which of course drives sales and revenues. And then there's those more maybe intangible things that we're beginning to be able to measure. I've mentioned human capital a lot of the time, but the fact is we all know we're living in a more competitive world, and we know now that graduates, the best and the brightest coming out of universities and so on, are attracted to companies that have strong socially responsible practices. They want to work for companies they can be proud of and that, are more aligned with their values. So, the ability to attract the best, the ability to retain the best, to reduce turnover, and injury rates, and all of these types of things are what we're able to measure through an ESG lens. And so all of these things lead in aggregate to companies that we believe are better positioned over the long term. So I don't want to bore you with a lot of examples in regards to how the type of research that Sustainalytics does alongside the research you've had access to at iTRADE can help you make better decisions. But let me just point out a couple of ways that you can use the access that's on the platform. You may be familiar with a company called Qualcomm, which is a telecommunications. It's in the telecommunications business. It makes the chips and deals with mobile providers. Does a lot of work in the emerging markets and so on. And I mean, going back a number of years now, we started to highlight the fact that they were facing a lot of exposure to anti-competitive practice searches, and it wasn't just happening with the FTC in the United States. We saw the European Commission. We were seeing some Asian regulators looking at the company, becoming concerned in regards to its practices, in regards to pricing and those types of things. And it's not that Sustainalytics was maybe the only firm that was picking up these things, but I can tell you that these are not the types of things that you're often going to find reported broadly. And so our research was pointing fairly early on in the process, and we highlighted the exposure that the company was having to these types of things, and quite frankly, it became a concern for our analysts, and we highlighted that concern in our reports. And this is something that became big news a little bit after we started to highlight it. And you see here that the share price of Qualcomm has suffered. Now, I'm not telling you that we're going to pick up all of these things with every company. I certainly wouldn't promise you that. And as you can see, there was a bit of a divergence in the price even before we became concerned with what we were seeing in Asia, in Europe, in North America in regards to these antitrust practices. But this is sort of the early warning system that an ESG research report can give you, not to replace the financial data that you've got and all those things that you're used to using, but just, again, as a little bit of an added lens, an early warning system, in this case on the risk side. The same sort of thing happened with Volkswagen, with Dieselgate. Did Sustainalytics or any other research house in the world predict Dieselgate? No, we didn't. But again, we were sort of an early warning signal, especially on the governance side, where we certainly highlighted the fact that the corporate governance performance of Volkswagen was below the standard that we would expect, and certainly below the performance or rating of its industry counterparts. And as the Dieselgate process unfolded, that weak board independence and some of those business ethics controversies didn't position the company very well to deal with the aftermath. It didn't give them the tools and the experience they needed to handle those things as appropriately as some other companies have handled sort of similar controversies across different industries in the past. So again, it's sort of that early warning signal, the canary in the coal mine, raising that red flag from time to time that we know can provide investors with insights they really can't access through other types of research. But it's not just about the risk side. Again, we're talking about risk and opportunity. And so in the case of General Electric, and you may have heard of eco-imagination. I mean, it's been in place at GE now for over a decade. But what you might not be aware of is how sustainable innovation has really driven, at this point, a material part of GE's business. And without that sustainably driven innovation program that was deliberate, that was systemic, was comprehensive, they'd be in a very different place than they are to now. And you can see there that that business has grown tremendously over the last decade. And not only does it, as a company, does it lead to lesser impact on important environmental KPIs and so on, and not only does it lead to savings in regards to the operational side of the business and the expense side of the income statement, again, it's hitting the top line and is allowing GE to separate itself from its competition, and as it gets into new products and so on. So again, it's from the both sides, the risk and the opportunity side. And the last thing I'll leave you with before I get to a couple of questions that have been coming in, it's that we can look at ESG at a security level, whether it's fixed income or on the equity side. We can look at it across any number of sectors. We can look at using ESG, sustainable data, in any number of ways, whether it's to drive shareholder value, get a more informed take on a company alongside your financial research. You can use it to align your portfolio with your values, but we can also look at it from a sector specific basis. And if you're looking at your investments, and different people approach that in different ways. Some really go bottom up and are looking at individual companies and building portfolios that way. Others of you may look at broader economic trends, and then look at sectors that you think fit into those. And if that's the way you approach the world, then you can also begin to look at ESG and help you understand what are the industry sectors that are set to benefit from some of the trends we're seeing in sustainability. And you can begin to access the research or look at the research that Sustainalytics is providing through iTRADE through that lens as well. So again, I hope what we've achieved as I've barreled through this is you have a better understanding of what sustainable investing is about. I hope you understand now that this is not a flash in the pan, that whether this is something you've heard about for a long time or again it's more recently hit your agenda, that this is one of the dominant themes in the capital markets and is continuing to grow, not just around the world but also very clearly in our own backyard in Canada and the United States, and that it's being used, this type of research is being used by a variety of investors in a variety of different ways, and I expect will continue to do so, which is again why we're so pleased to be working with iTRADE, really for the first time here in Canada, providing this depth and scope of information, putting it into the hands of individual investors like yourselves, and for the first time giving you access to the same type of insights that the largest, most sophisticated wealth managers and pension funds have at their fingertips as well. So with that, I've had a couple of questions come in. The one I'm going to start with is that somebody has asked, do the Sustainalytics clients look at energy companies? I've heard that asset owners and managers in various regions are divesting from energy companies. Is that a feasible option for Canadian investors? Well, the answer is yes. Sustainalytics provides research on energy companies. We provide ESG research and reports on the indexes, sometimes, as I say, the good, the bad, and the ugly. But again, as I've noted earlier, we have investors that choose a variety of different ways to approach sustainable investing. Certainly, some investors will choose to avoid the energy sector entirely. And from an ESG perspective, that may be because they just simply do not want to be involved in companies that have a high carbon footprint. They may choose to direct their investments to companies that are more focused on that transition to a lower carbon economy. But the fact of the matter is we also have a lot of investors that continue to invest in energy intensive or carbon intensive industries, but they tend to use our research and integrate it into their decisions to help them understand what are the companies that have greatest exposure to, say, climate risk and carbon risk, to get a sense of whether those companies understand the exposure they have to those issues, and if so, how are they working to mitigate that, whether it's through their production mix or innovation and product development, whether it's through their operational side, whether integrating environmental technologies into that side of things. Because at the end of the day, investors want to be positioned with those companies that are best of class or best of sector, which we think will position them better for future risks and opportunities. So yeah, our clients look at a broad range of sectors. They need diversification across those sectors, but again, are integrating our research in a number of different ways. So sometimes people ask me, Michael, or Sustainalytics, are you pro-divestment or pro-diversification? And I would just say, I'm neither. What I am is pro-integration of environmental and social governance issues into the investment process, because I fervently and for a long time have believed that can help us make better decisions. I accept the fact that integrating that lens into your investment process can lead to very different outcomes, and those outcomes might be right for one person, not so great for another, but that's the beauty. The tool allows us the flexibility to do what's in our own best interests as investors. And the last question that's come in, and then I'll pass it back to friends at Scotia. What environmental social governance issues have investors been most focused on in our experience at Sustainalytics? That's a difficult one to answer, because it can change over time. It certainly can be influenced by the part of the world in which we work and live. I would say that in Canada, and probably no surprise to you, environmental issues seem to be front and center. Our markets here in Canada are very resource intensive, and so issues like exposure to water risk, carbon, these types of things have always been on the agenda here. I think one of the things that maybe has differentiated Canadian sustainable investors from some other places around the world is the fact that we've had a focus on Aboriginal and Indigenous rights, more so than a lot of other places, with maybe the exception of Australia, to be honest. But the reality is that investors in this part of the world understand that whether you approach it from a values perspective or a value perspective, that given social license to operate, the regulatory framework, the fact that Indigenous peoples have ownership rights over large pieces of land where companies want to operate, these are issues that we need to integrate into the investment decision-making process in a systemic way. Those aren't issues that are maybe as top of mind or agenda from investors in parts of Asia or Europe and so on. So that's maybe not a very easy answer, but it's one, it depends, which again, I think is the strength of the information that you have in front of you. It's broadly based ESG, and part of what we try to do is focus on those issues from a key ES&G standpoint that are most pertinent given what you've got. Sorry, questions coming in. I can't read and think at the same time, obviously. It's a comprehensive set of tools. Sorry, just I'm having some.
Hi, Michael. The question was answered.
Oh, was it? Okay. Thank you, Margaret.
There will be another webinar to go over the sustainable tools that are available through Scotia iTRADE's platform.
Okay, great.
And that's happening on May 10th, and I'm sure that Scotia iTRADE will give a little bit more information as well.
Great, thank you. That was Margaret, everyone, and thank goodness she's here. Well, I think that's it from the Sustainalytics side. Again, thank you for everybody's attention. I'll just send it back to iTRADE. We'll talk about some upcoming webinars that they have on their agenda. Thank you.
Thank you, Michael. So maybe while we're just waiting for Scotia iTrade to wrap up this session, I'll just encourage you to go into the Scotia iTrade platform and to poke around the sustainable investing tools. We have a company level ESG reports that are available to you, as well as on the screener side, we have various different screens that you can apply to your investment portfolio or investment universe, including on such issues as climate change or business and human rights, gender diversity, or even looking at involvement in tobacco, pesticides, military contracting, controversial weapons, and other areas. But as noted, we will have a follow-up session to go more into depth on the tools that are available to you as well. And that's happening on May 10th. We hope to see you there.
Thank you, Margaret. Thank you, Michael. That was quite interesting and an engaging presentation. So what's next on the agenda? You can access the webinar recordings on our YouTube channel, or just email us at education@scotiaitrade to request a copy of this recording link. And if you have any other questions, please also you can email that to us and we'll be able to address them over to the Sustainalytics partners. Now, after you exit the webinar session, a short survey will load in your web browser. Please take a few minutes just to complete that, as it helps us to gauge our offerings and how well we're doing with our educational solutions to improve or to make them better to meet your needs. So yes, as mentioned by Margaret, coming soon, we'll be presenting a webinar on what is sustainable investing with our Sustainalytics partners as well as Scotia iTrade. This will be on Wednesday, May the 10th at 1 p.m. So you can visit our events calendar to register for that one. Also, you can visit our scotiaitrade.com website to experiment with the sustainable investment tool and also to watch some of our introductory videos that's there. So on behalf of Scotia iTrade and the education team here, I'd like to thank Michael Jantzi and Margaret Child for their wonderful presentation. And I'd also like to thank all of you for attending and for staying with us. We hope that this presentation has helped you to understand the sustainable investment idea a little bit more, and also to help you to engage with the tool on our website. The presentation, by the way, has been uploaded, so you may download that to your computer. Thank you very much and have a very good day.